Here is the 3-step checklist I use to spot liquidity traps. Works on any market, any time frame. Okay, listen closely. When you come to the chart, the first thing you need to ask is, where is the money hiding? The market is like a thief. It wants to grab the money that traders leave behind. And traders leave money in 3 common places. You know, when everyone keeps throwing that diagonal line, buying and selling every touch, yeah, that's where the market builds up stop losses. When too many people trust the line, the market breaks it and takes their money. Second, sideways liquidity. Sometimes price just goes sideways like it's stuck. Traders keep buying at the bottom and selling at the top. Guess what? Their stop losses sit just outside that box. That's the money the market wants. And third is equal highs and equal lows. This one is the easiest. When you see 2 highs at the same level or 2 lows at the same level, people say, oh, that's a strong support. That's a strong resistance. Nope, that's a bullseye for the market. Stops are lined up there and the market will attack it. So step 1 is always spot the money. Trend line, sideways or equal highs and lows. Once you see where the money is, you will understand where the market wants to go next. Step 2, inducement. Nothing is safe. Alright, now you found where the money is hiding, but here's the trick. Nothing is safe. The market doesn't just take one side and stop. It loves to trap both sides. That's inducement. Let's go through each liquidity types. First one is trend line liquidity. Imagine price is trending up. Everyone is buying on the trend line. The market then suddenly drops and takes out the lows. Traders think, okay, liquidity crap, now we go down. Wrong. The market also takes out the highs. First, it kills the buyers on the lows, then it kills the breakout traders above the highs. Both sides get punished, and vice versa for downtrend. For sideways liquidity, in a range, traders buy the bottom and sell the top. Price fakes down, takes out the lows. Everyone says, okay, breakout down, then boom, it shoots up and takes the highs too. Downside stops gone, upside stops gone, both group lose. For the third liquidity type, equal highs and equal lows, you see 2 highs, traders say that's a strong resistance. Price breaks above, takes those stops. Traders say, okay, now the lows are safe. Nope, the market comes back down, breaks the equal lows and cleans them too. Same with equal lows, nothing is safe. So remember, the market doesn't want to be traders, it wants to punish both sides. That's inducement. It takes money from one side then the other. Your job is not to chase the first move, your job is to wait and see who really got trapped. Now you understand inducement. The market never takes just one side, so how to read it? Here's the simple way. First, spot which side got taken. Did price just run the highs or did it run the lows? That's step 1. Know which group got trapped. Next, expect price to hunt the other side. If highs are gone, I'm waiting for the lows to go next. If lows are gone, I'm waiting for the highs to go. Simple. Then I look for point of interest where the supply or demand area price could react from. I don't enter just anywhere. I want price to come back into that soon. On the lower time frame, I wait for change of character. That's my confirmation. Price takes one side, comes into my point of interest, shows change of character. That's when I strike. So it's like this. Liquidity taken, price comes back to my zone, change of character on lower time frame, I enter. That's the whole game. You are not chasing the first move, you are catching the trap reversal. Basically, what we are looking for is something like this. Let's say this late, there's your order block or demand. We want after induced this liquidity build up, the trend line liquidity, what we are looking for is a CHoCH, something like this, mitigation, then change of character. As you can see, something like this, I am expecting the high will be taken out. Let's go to real example so you can understand it better. On this example, you can see that price induced the high first, mitigated a supply, then price rushed down to take out these lows and mitigate again a demand to take out this high, the first inducement. Here is another example of downtrend trend line liquidity. Price was creating lower low, lower high, lower low, lower high. As you can see, very close candles. This proves that this is just a liquidity. First, price induces up, mitigates a supply here. Let me show you. First thing price did is induce high, then induce low, rushing to mitigate another demand. Here is another perfect example of liquidity trend line. Price just keeps doing this. We can adjust trend line like this to get more touches. Price first induce low, then take out the high. Another trend line here. You have 2 touches, at least 2 touches to consider it a trend line. Price took out these lows, then price again took out this high. An example entry would be something like this. Price takes out the trend line liquidity. Now we are expecting price to go up, right? We are looking for a change of character, which happened here. As you can see, we will cover the low, maybe add some buffer. Take profit would be the next liquidity high. Here is an equal high example. Price was bullish, higher high, higher low, then higher high, suddenly creating what it looked like a lower low to trap and trick traders. Then price went high, mitigated this high for support and resistance retest. that this resistance will hold the price, then take out the move to just take out the support and resistance traitors. So now you see the secret: the market is never safe. Highs taken, lows taken, even trend lines breakouts get hunted. But here's the key: don't try to master every type of liquidity at once. Focus on just two: trend line liquidity and equal highs and equal lows. These two show up every single week, every single day, and they are the easiest traps to spot. So your process becomes simple: see trend line or equal highs and lows, wait for inducement, one side gets taken, find your point of interest, drop to lower time frame, and wait for change of character. If you master just this one concept, you will already trade better than 90% of people chasing random signals.